And this is the point about any. We're going to cover a quite interesting subject today. There is a wonderful people who are promoting their Deepcharts software, and that's exactly what you're seeing right now, their explanation.
So here there was a big passive buyer that was completely ran through by sellers, okay? So these are two slightly different indications, but when both of these get traded through, that's when you get real sell momentum, real sell momentum, real sell momentum.
Because by using their promotion, I would like to let people understand that the way that they're reading the charts. And the idea was that Andrea Simi, and I respect him, and Fabio, both of them I do respect, demonstrated that this is the big trade indicator. This is the big one, like this one, and this one, and they're selling that indicator and saying that when they point to the square and they're saying when it's combined with the round one, then it is really a strong signal. When the price is getting these two together, then it is the good signal for the entrance. You can see, you can take like probably 30 or 40 ticks if you think that this is the signal. Now, because I have an issue with that, and my point is we need to read the chart. And this is the point about absolutely any indicators that we use on our charts. Because many people take indicators as the signal, and if you take any single indicators like this one as the matter of entrance to sell, that means you don't understand what you are doing. And now we need to be a proficient in reading the charts instead of taking individual indicators as the simple signals. Is that a signal? Absolutely not. This is wrong. I'm going to teach you something that nobody teach in the industry. What they have here on the left side as the really strong indication for the entrance, it is the large one. And they have these two big trades. So this is the big trade and these two big trades. And the point was that when the price is going down, these two sellers entering into the market aggressively, they provide a really strong indication for us to win shorts, right? When we're shorting here, and what you're seeing as a bubbles, this is delta. Why delta is important, and in some instances it can be even much more significant than the simply a big trades, the big delta trades, because delta show us who is a winner between the fighting sides, between two fighting sides. That's exactly why delta in some instances can be much more useful than the indicator of the large size of the trade. I'm going to use that situation to show you how to read the chart based on the footprint and all indicators that you can see right over here, to read this chart in a very different way. And at the same time, I'm going to show you the big mistake that everybody who explain why the chart is moving, the price is moving according to action market theory, they're using some terminology that is completely accepted and it's completely incorrect. So that's my goal for this video. Okay, now let's take a look. Okay, first, what we're seeing on this very candle, let's go candle by candle. By the way, before we're seeing this large sell over here, we're actually seeing, this is a 109, there's two of them. There's a totally about 300 in this bubble because there's two of them on top of each other. Now, let's see what precedes that situation. Now, this is super important for us to see the bigger picture, not just a small fraction of the picture. We need to see and encompass and understand the whole game, what is happening over here. Now, you see that there is a range on the left side, There's a range, right? Okay, this is the range. This is accumulation. It's going from the left to the right. This is accumulation. And usually before there's a big explosion happens going upward, there's a large accumulation. Most of the people who explain the action market theory and pointing to, hey, we need to use the volume, they saying that this direction, this movement is the price discovery, that the price would like to discover another range or another a price that is, especially those people who explain the volume profile. The people who love to explain the volume profile, they're going to draw you a lot of volume over here on the volume profile and over here. And this is the price discovery. And I tell you that most people who explain your volume profile like that, they're completely wrong. They're teaching a wrong concept. Price is not discover another place to go on a sidewalk and find the equilibrium over here. That's exactly not what the price is doing. They're completely wrong and name this particular impulse as the price discovery so freaking wrong. Because price never wanted to go this fast that long. It is very dysfunctional process over here. Very dysfunctional. Yes, we're seeing the 92 bubble, that it is the buyers who want to push the price higher. Exactly. But then let's take a closer look and ask yourself one single question. What happens with the market maker during this process? What happens with the market maker? Is the market maker making money or the market maker losing money right over here? In this very candle, this impulsive candle that going upward, we're seeing that there is a sellers almost give up. There's a 32 of them sitting right here, 69 on a footprint. There's some of them 60 sitting over here. You see that this is the zone. This is the buyer's zone. This is the imbalance zone. This is the imbalance zone. You see the numbers in bright blue, the buyers in green, in green, in green, but the imbalance, the single imbalance like 47 over here, 47, single one, large one. There's a 69 imbalance, 69, large one, 38. And there's a whole row of imbalances over here. When there is a more than 3 or 4 imbalances in the row, one after another, it creates this imbalance zone. What is the imbalance zone? Take all you know from the ICT and flash it in the toilet. Until you see the X-ray, what's happening over here, you don't understand what is the imbalance. You see, on the side of the sellers, there's like 0, 0, 0, 0, 0. And on the side of the buyers, there's like a large over-skewed number, 69, 38, 25. This is just like, of course, you calculate imbalance this way, diagonally. Yeah, that's the right way to calculate it, absolutely. So this zone is where the buyers made their efforts to go higher. And when the price will come back to any zones like that, it's gonna get reaction. Because there is these people still may prove on a retest that the price is sitting right there. So we have to be super careful when the price somewhere in the future come back to this area. It will get reaction. It may get reaction and then can go through. Absolutely, yes. But the point is, the price always will get reaction right over here. And these people will prove themselves, are they still there or not? Now, let's go and scroll a little bit higher and see again, where is the fair value gap? You see the lowest amount of volume traded on this chart. Where do we see it? We see it right here. This is 0. I'm like 1, and 1, almost like 0 to 0. You see, this is the lowest. You see, this is the volume profile on the candle. Okay, this is the volume. And you see, this is a large dip. This is the deep. This is the deep. Then again, where the deep is, right here is the deep. This is the lowest volume right here. You're seeing on the left side. So that's where the absence of the fair trades happens, in the lowest volume. Let me demonstrate it right over here. Lowest volume. These areas are quite interesting for us. But then let's go and learn about this candle. What happens right here? You see that here, when the price is coming higher, what happening? The fight is happening. Let me clean up. The fight over here at the very top is happening. This is buyers by market 67.99. They want to push market higher, right? They're active buyers, aggressive buyers by market. But then you're saying that there is this is the seller, and he wants to, they start selling. You see the fight here, you see the total volume over here, it's a bell curve. The fight is happening over here. That it means that this candle is getting stuck. What is even more important is the POC on this candle, guys. POC on this candle. Where do we see the point of control? Right here. This is the POC. This is the largest fight in this very candle on both sides. On a buyer sides, 143, and on a seller side, there is a 92 where it's selling. That is the POC, point of control of this candle. Now, what happens when you see the point of control of the candle at the very top of it? This is a really significant sign that entering into a buying mode now becoming risky business. So the fight happens over here, but still, after seller is trying to sell, we deepen a little bit. So we landed on this is 156 on a buyer side. This is the buyers, and the price match exactly that tick to tick and bounce it. So these people sitting right here as a buyers in this very bubble prove themselves, yeah, we're still here. They push the price higher. That's exactly these guys. And by the way, on our footprint, it's called single imbalance. You can set the single imbalance on the footprint and you can see that pretty good and well. Now, that give you a good context. Now, let me scroll even higher. Why I'm saying that if you follow the situation that Andrea and Fabio demonstrated, then you may lose your pens, you may lose all you have, because there was a one candle going up, then there's a second candle with the absorption over here, because it's kind of like an opposite absorption, because this guy is a red bubble, 256 I'm seeing right here. This is the 256 on a NQ is pretty substantial. This is a 1 minute bars, exactly like what they have. Okay, 256, it's substantial. But what's funny about this sale, it doesn't go through. It went through a little bit and then boom, it went up. So that means these people were absorbed in an opposite way. That is the opposite absorption. They wanted to sell, but when you see the red candle over here at the very top, what is that means? Sellers are selling, but the level two actively buying here. So level one is selling, level 1 is selling, but the level 2 is actively buying. This 259 is aggressive buy market sell, and but the level 2 sitting right here. You see this candle right over here? They actively buy it. This is the interaction between the level 1 and level 2. They overcome 259. The buyers on level 2, the passive buyers with the limit orders, they overcome this bubble. They push the price even higher. Now, this is quite interesting what's going to go right now. What happens over here is more significant than any sellers like Andrea and Simi is pointing over here. They're pointing to over here and over here. And they're pointing to over here. This is the sales that they're saying is significant. I can mark it in the red, but when I stretch this chart, you will see the bubbles right there. They will show up. What happens on the top? We need to read the chart not based on one particular indicator. Indicator itself can be a good indicator, but it's not enough for us. Now, let's take a look. Let's take a look at the situation. Now, you see that when this buyers on level 2, they push up the price higher. Boom. Where do we see them very clearly and obvious? The price is making another disbalance. This is 10. Single disbalance. This is 9. And when I see the 10 and 9, and this is even more 32, disbalance into the buying side of it, but the candle is swing down. The candle went down. The candle went down despite these buyers stuck over here. What is this situation? This is the situation when these buyers trapped. It's called unfinished business, right? It's called unfinished business, or it's called trap buyers. Those of you who knows what happens with the trap buyers usually understand one single point. When the buyers are trapped at the very top and the price went against them, they can end up by margin call if the price go too fast, too low. They can capitulate by margin calls. But if it's a level 2 people, usually institutions, they understand what they're doing. Now, another trapped buyers sitting right here, 14 and 4, okay, 28 total. These guys are trap buyers and these guys are trap buyers. I mean, to be accurate, this is the trap buyers and this the trap buyers. What does it say to me? Then I have to expect when the price is going somewhere, some later, there's a big chance that price will come back into this region. Now, why is that important? That important, if I teach you to rely only on a one single indicator, like what they're saying that this is the one, this is another sale, and over here, and this one is sale. They don't even distinguish this one. 31 is quite large as well because it's on an NQ, but they pointing on these two as the strong signal to sell. If you act here relying on these big trades, these two big trades, as a sales signal, what's going to happen? On this chart, you can see the obvious picture. If you enter it, let's say over here, it's a signal to sell, okay? Then the price went higher and you lost. If you enter it over here, yes, of course, the price went higher and you stop taking, stop taking, stop taking, stop taking. Big trades are not indicator in this situation. They selected a wrong scenario. Okay, I'm gonna draw it as the zone. This is, according to me, is the zone, guys. It's not a big trade indicator right over here or right over here or combination of these two, like they pointing on their charts, because they're selling indicators. I'm selling indicators as well. But the thing is, we need to teach everybody properly that if you and I rely only on a single indication without the context, we're going to lose miserably. That is the point. So the price went down, and what happens? Then the price went almost equally back to the zone. Let me draw this for you. Almost, this is now retest. You see this candle? The price went down, retested, and this is very safe entrance, and you can get probably 30 to 40 or even 50 ticks. 50 ticks. You will be in positive by selling it, by shorting it, but shortening from the retest. The point is, when you're seeing icebergs, when you're seeing big trades, when you're seeing a big delta trades like what you're seeing right now, consider a bigger picture. What's happening over here? But when you consider it as a zone and you're seeing that it is the retest of that zone, the price proved that its price not going to go higher. No, that the price is bouncing, and then the sellers united over here. Level 1 and level 2 sellers united over here, and they moved the price down. Yes, you can see that in this scenario, the sellers by market acted over here, right? But then the price came back almost to the same retesting area, like this one area, and touched this area 1, 2, 3 times. Now, if I'm an aggressive seller, I may think I am totally a fact and I'm a moron if I'm entering according to what they tell me by big trades over here, because I'll be taking off away with a margin call or by stop loss, more than once, right? Then to enter on a retest, it's much safer. And even much safer when I am not jumping into the train that is leaving the station, because train came 1, 2, and the third time. And even over here, it maybe you can count as the fourth time. You see my point? When we're sitting and we're selecting the ideal situation, we can risky because the stops can be right here, can be right here. If you're entering somewhere like even like over here, where is your stop? Your stop is right over here, right? At the very top. That's a large stop. That's freaking large stop. Right over here. Very large stop. This stop is too large. This stop is too large as well. Not significantly, but yeah, you can live with that. But this is the previous stop. So, but it's smaller now, and this stop will be smaller over here. The key is the smaller the stop, the less you put at risk. And this is already a better situation that we can enter and execute not that aggressively like before. We were aggressively entering into the market. Now, let me show you situation at the very top that I promised to you. This is a really great indication at the very top. Buyers are buying at the very top. But you see the red square? 1, 2, 3. This is absorption. This is the indicator of absorption. This is, in blue, is unfinished business. And this one is absorption. This one is absorption, both of them. You see what happens over here? While these people trying to buy, the level 2 absorbed and the price moved lower. So this is true absorption. This indicator of the absorption, it shows you absorption that even bubble or delta is not able to demonstrate it to you, but we have this on our footprint chart. This is a true absorption because there is a special formula that you can gauge on the footprint settings through absorption. And this absorption is what moved the price lower. It doesn't let this price, even with a huge attempt to buy, doesn't let the price go higher. So, do you want to rely only on a big trades? Sometimes yes, but not in the situation that the former champion and his companion demonstrated to us on this very over here. Because price after these two moved significantly lower, but before it moved lower, it went higher than lower. And you see that in the long run, you see the price came back to this very area. Yes, you will be able to take, 40 to 50 ticks over here, or maybe if you are lucky, up to over here. But the missing side of the picture, the missing point of this picture is what's going on in this candle. Guys, this candle is the bigger answer to this chart situation. But this is the point for me to educate everyone that when we don't understand what's going on in this big picture, including this very candle, we misunderstand action, the price action, because something happens over here that market maker don't want you and me to understand and know. So the people saying, oh, the price went down, then up on a price discovery and went up. Here we go. It is an incomplete story. In many professionals, so-called professionals, using the volume profile chart, explanation is correct, but some of that is completely bizarre and completely outdated because look, guys, what's happening over here. Again, I'm coming back to where I'm started. This is the most interesting piece of the puzzle. Look, there is a long range on the left side. What is this long range? This is accumulation. This is accumulation. Now, when price went higher, the true explanation why price went higher is not because the price wanted to catapult to the upper side, because these people who were here, if they want to sell, they want to sell from where? Yes, of course, they want to sell from here, but they accumulated over here. They don't want to buy too much. So they're buying. Buying is expenses. Selling is much more profitable than buying. The market maker, what happens with the market maker in this candle? Market maker remove themselves out of here. When the candle expanded, when this bar is expanded, the market maker, if it was participating, it become negative. It's loss in loss. Okay, the market maker was in losses because the buyers were buying, and the market maker was in negative, 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 negative. So the market maker, of course, this is assumption, market maker was in negative zone. On their book, they were negative right over here. Now, you're going to get a new explanation why the price is moving the way the price moves. When the market maker in negative zone, what the market maker trying to do? Of course, market maker going to go and work over here and make profits on a first buy and a first sell on a spread. Absolutely. So it may recuperate some of the negativity that they earn over here in the negative zone, their losses, they can recuperate somewhere over here. Yeah, in some, but maybe not completely. This is why, in my understanding, what's most important to understand that the price have objective. When the price have an objective, it means the price have a reason be here, to be right over here. There's a goal, there's a task, there's an objective that price needs to mitigate this block. Come back into this block because market maker is sitting in negative zone here. Maybe even right over here because the movement started from this very candle. Those of you who understand the order blocks, that's exactly where the movement is started. Boom, and we went up. But all of this movement, the market maker in negative zone. So it will try to rebalance, and so they're going to try to come out of their losses. Market maker loss. So this is the point now. Let's take a look. Let's take a look. By the way, between we're going to make a final conclusion, I would like you to draw a zone, but let's take a look. By some magical momentum movements, the price came down to what? This very order block. How? But the price start to fight over here, unsuccessfully. That was the first one attempt, unsuccessful. Then the price went even higher. There's the buyers were pushing the price higher. And then the buyers were actively over here because somebody have to buy these 250, 255 cells bubble delta. There were like buyers who were trying to push it from here, but they were not able to. So the sellers finally overcome here, not over here like Andrea and Fabio is talking, only after here. This is the spot on the chart to enter for short. This is the very spot. We can come back to this spot and look in details why. But you see that, let me clean it a little bit, and I'm going to draw you a zone. The most significant zone is definitely this one. Now, we can see that this zone is playing a few times its role. So the price left, go through inside of it, rebounds it from that zone, rebounds it the second time from that zone, went through, again, retested from the bottom, and this is, we call it mirror. When this point, and that point become like a mirror, so we went down, bounce it, went down, bounce it. We went through, retested, and bounce it. And in a big scale, if it goes a little bit lower, we tried to do it again, and we bounce it again, almost from that, the same kind of like the spot zone. It's going to be a little bit stretched, but anyway. So where are the best location to enter according to indicators, according to the situation, is this is the safest spot to enter. We're seeing at the very top absorption by the red rectangles. And it's not just a small absorption, by the way. Let's take a look. Absorption, 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 absorption. We're moving furiously down. This is the impulse candle. This is the true impulse candle. Then we're seeing more absorption from the top, absorption, and then we're seeing that here is a single imbalance zone, 61 imbalance zone. This is a large cluster. You can take it as a large cluster, and price is getting reaction. Even they're trying to buy 47 total at the very top. There is absorption, absorption, and absorption. Now, this red who tried to sell produced another single imbalance zone. This is the single imbalance zone because it's a large cluster, and this is a large cluster. So this is the spot where the price retested if there's some buyers capable to move. So we're judging not by desire that they want to buy. They wanted to buy, but the price reaction. And the key here is a price reaction. Remember, everyone, including me, who sells you indicators, we want to sell you indicators. But the truth is, you need to use indicators not as a single factors, but as a co-factors to each other, and look in a big picture what's happening over here. When there's an absorption like that, and there's absorption like that, and there's a red bubble at the very top of the candle, and then you see that there is a big wick or tail, big wick and the tail. By the way, let me show you another little hints that some of you may think that, oh, I know this really well. Oh yeah, you know it, but you're not using it. Look what's happening with the POC. POC is over here. Point of control on this bar is over here. Point of control is right over here. Point of control is right over here. What's happening? Point of control is right over here. It was over here as well. But you see what's happening? The point of control. When you look how the point of control travels, you can understand that when the point of control on the wick, on the tail, it is the most dangerous situation to buy. It is the signal, get ready to short. And when the price retested one of the large clusters, like this single imbalance zone, as you can see, that is the safest spot to enter in a cascade. This is the cascade situation. This is the safest spot to enter, not by relying on a one single indicator, but by reading the charts. And that is my point. I don't want to be guilty, guys, because I do sell indicators. I love them. They work magically. But if we trading based on a one single indicator, we don't understand the level one interaction with the level two, then we're missing the whole goal. The market happens not because buyers and aggressive buyers, there were like some of them over here, but aggressive sellers over here trying to sell. No, because of the interaction, between level 1 aggressive part of the order flow and passive side of the order flow. This is why we need to look at the both sides of the order flow. Almost no one is teaching that. Yes, there is a heat map behind this chart, absolutely. And there's an MBO dome on the right side. Most people don't understand the difference between the dome and the volume profile and the heat map. And I'm going to explain it to you if you wanted to. So now you see on this chart, you see the buyers imbalance zones. You see the single imbalance zones, and you see how the price is reacting, and price is reacting on the clusters more than on the single indicators. You see, this is the zone. We need to read the charts instead of read only one single indicator. That's the single point. And I will have my peace in my heart when we're not going to rely on a single indicator, although we're going to provide you even more sophisticated indicators that nobody even produced before, because we are the only one that doing. Let me go to the MBO. Yeah, I can clean it up. There's a bunch of icebergs right before the market close. 1 hour usually happens before. So those circles are the icebergs. And I need to put some filters because there's too many of them right now. On the NQ, definitely, I would like to go to the iceberg indicator, click on the iceberg and the minimum volume. Okay, I'm going to say maybe what? At least maybe 5. So I'm going to filter some of them. Here we go. Because when we trading the icebergs, the single icebergs, why people don't know how to trade icebergs is because they don't want to spend time, because they don't want to analyze that the icebergs also beneficial when we see them as a clusters. Now, when you see the iceberg like this circle or this square, it's a two different type of the icebergs. One of them, this on sale, this one is aggressive. We call them aggressive because it's like, it feels like, oh, I don't have enough time. I want to enter as an iceberg, invisible to the level 1 people. It is the iceberg on level 2, and it's reloading its content up to the 39, volume 39, but reloading it maybe 1 by 1 or by 5 or by 10, I don't know. But then it's really kind of like desperate. Desperate is a better word for this iceberg. And boom, the price went down. So that's a large iceberg. And we can trade it in a simple, in this context, in a simple techniques or the simple way, because most of the other icebergs we need to see as more as the clusters. And then it's going to make sense for you guys. Because when somebody is buying right here, you see these guys, this is the traces when how they changed their iceberg positions. And finally, these icebergs ended up where? Yeah, it's ended up right over here, right over here. But this is the trail when they conceived the idea about this iceberg, somewhere like over here. That's amazing, isn't it? But now, when we take the icebergs as the clusters, it's going to make much more sense, because the icebergs can be counted as well as unfinished business. If you see the iceberg, this iceberg is the buying iceberg. Is the price supposed to go up, but these people can sit really well and tolerate this drawdown. This is what you and I probably we don't want to be in a drawdown like that, but they can be. And when we're seeing the icebergs as a clusters, that makes much more sense, because nobody online teaching how properly trade the icebergs. Now, let's take a look at the MBO. I would like to finish with the MBO. Where is my heat map over here? Heat map is okay. So let me make it like 1 bar and to see the all volumes, and I'm gonna unhide everything. So you're gonna see the heat map will start building it. I forget to turn on the recording as a history. Now, what is the heat map to compare with the MBO? What is the heat map to compare with even Delta 2? Because right here, you're seeing the tool that People have no idea that this is the delta 2 below. It's a delta 1. Okay, let me draw it. This is delta 2. This one over here is delta 1. This is delta between bid and ask, and this is the between for pulling and stocking delta. That's what this is. And it produces you momentum that you know that these sellers on a level 2, you see this? These sellers on a level 2, they taking over. They overpowering. They are the driving force on the market right now. You see why price is moving now? Because this is delta 2 increasing, and that's why the price is moving down, because people on the selling right here on the right side on this dome, they are selling, they're increasing their sales, and you're seeing the delta between level 2 right upper and downside on the dome. You're seeing it right over here. This indicator is many people don't even dream about. You never seen this indicator anywhere, anyhow, and it's already working, and we're using it for what? I don't know, for a year. It is when the delta is combined on a level 1 and level 2, this is absolute powerful cofactor. This is the super powerful cofactor to execute in a direction. And the color is going to show you direction, because if it's red, of course, we're selling. If it's regular delta is red, we're selling as well. So now you see if it's going to change to the green or whatever, and it's going to make sense to be careful. Maybe you're already late to start selling. If it keeps going and it keeps growing, then yeah, definitely. This is absolutely amazing cofactor. Now, my point I want to make that people ask me, what is the heck the difference between the heat map? Like this is the heat map levels, right? This is a heat map, this is a heat map, this is a heat map. I just filter out some of the less significant prices, but this is what, 12 so far. We are in an Asian session. The answer for many questions that you, sir, have over here, MBO is the tool on its own. Why? Because MBO is not the heat map. Heat map, you can reference to the option gammas and so on. Yeah, you can, and levels, but this is the heat map price level, and this is the heat map. It is the historical price levels. It is recorded what these MBO people were doing in their past. In a relatively recent past, they were sitting over here, but so far, since I started recording from this time, I don't know if they were over here or not. But in a regular, if you recorded for a long time, you will see, these people were sitting here for a long time. The longer they're sitting here, the more significant they are sitting in present time. And you can correlate that this level gonna probably hold. They're not gonna flip. But the MBO, and many traders confirm it with me, give you much more precision than any gamma and other levels from the options. Much better precision, because you can see it on a tick by tick basis in real time. There is a guy sitting right there right now. There's a people sitting right there right now at this very second. Or they're gonna flip or not. MBO is much stronger to demonstrate the current momentum and the current situation in the price range, in a price situation. Much stronger. Because some of them can, if you squeeze it like that, you can see, oh, okay, this level, this yellow 36 was sitting there for a while, right? Maybe that's some gamma or whatever beta or whatever the other level. But the only way you can confirm when the price will descend to this price level, the only way is to see on the MBO, are they still there, and how many contracts. Like you see this 10 order, Or let's see that this is 17, but this 17 is more valuable for me than this order 10. Or let's say there's like over here is 12 and there's a large order 5 sitting right here. Which one are more valuable for me? 17, because this 17, volume 17 is composed out of the 14 contracts. There's no one large single order sitting here, because when the price is going to descend over here, there's a bunch of small orders sitting here, probably from variety of, traders, people, whatever, that they're not going to flake out. But when the price will go to this 10, this 10, if this 10 is removed, this price level is not going to longer holding for us. It's not going to provide us any resistance, any buying power. So the MBO is the DOM on the MBO that capable to, even when by the way, you can see there's no other DOM like that. Well, here's why. Because when the iceberg is started to load, you see the iceberg is, let's say it's originated somewhere here, right? And you will see the lifeline to the DOM. And you will see when the price will come back to this level, and if this lifeline exists, you will see how this iceberg is get reloaded, 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 and reloaded. And you will see this iceberg is gonna grow right in front of you eyes. You guys never seen it anywhere anyhow. This is absolutely unique, but this is the visual MBO DOM. This is absolutely unique tool that there's no any other company on the planet Earth ever done and accomplished it what I'm just showing to you. So the point is that profile volume of profile show you historically when the price was. If you put the volume profile right over here, it's going to draw you what? This is the range, right? And it's probably going to give you a curve like that. Now, what people do, they're saying, oh, okay, if the price is going to go and retest it, not able to hold, then that's how you trade the volume profile. But this is the whole freaking fucking zone. When you seeing this particular price on a heat map that stays there for a long, this is 50, right? This is probably market maker, and this is market maker right now, this 50. When it stayed there for long and created a liquidity level that sits there for a long time, you can rely on that more than a volume profile, because the people may show up on a level 2 and load their positions right over here. Or you can see the icebergs as a clusters, by the way. Take a look at some of my screenshots that when I trade and I show with others, the iceberg clusters, there's like a 20, 40 icebergs, one by one on each price level, which you will never see on a fucking volume profile. Sorry, guys, I don't have other words. You trading the outdated charts. Volume profile was really popular a long time ago until the MBO became available and until the new people with a new brain and new mentality start to build new type of indicators like this. Because you can see the heat map on the book map, but the book map is outdated software. They were first in the area of the, showing the liquidity on the heat map, but they are no longer forward movers. They are behind. Sorry to say it to them. Okay, you see this level? You see this liquidity is in white, and there's like a 5, 8, 8, 7, 3 of those orders. We'll see what the price is going to do about it. This is in real time. You see the price probably going to come and react over here, 28 by 9. We'll see if they're going to flake or not. We'll see it in a second. We'll see if they're going to be removed. No, they are not removing themselves. They're still sitting there. They are serious in their intentions. This is what no one other level, gamma, shmamma, bahama, whatever, fakama, ever show it to you. Although use the options levels as a prediction, and it's probably a good tool if you use it along with the MBO DOM and the heat map. So Many traders come back to me who use the gammas from the options and so on levels, and they're telling me, yeah, when you combine these tools, the MBO DOM show you the up to the second millisecond situation. There's no any other level from any expensive website or services able and capable to show you the current up to the millisecond situation on the DOM level 3, or level 3 is not accurate to say, but on MBO, market by data, market by order DOM. This is what you're seeing right in front of you. That's why nobody is able to beat MBO. If you use it correctly, and if you have the indicators that visually capable to demonstrate you or to show you on the charts what you need to see, what you wanted to see, and you can filter, we filter out the short-lived price levels or price liquidity, whatever liquidity, we shorted out the short ones. Now, this is more significant. That's why they stayed. So you can filter out right on fly. And this is absolutely amazing. So this is the footprint is imbalance zone. So, and now this is the only software, guys. This is the only software so far where you can obviously see integration between footprint, icebergs, big delta trades, and the delta 2, delta 1, and MBO on the same chart. You can trade combination of these indicators, or you can hide any of them, so it's not going to clutter you. So that's what you can do, because this is NQ 30 seconds. I'm going to switch to 30 seconds because I probably have a data on 30 seconds. Now this is a 30 seconds chart. Now you're seeing liquidity on the level 2. You're seeing the up to the millisecond liquidity on the MBO DOM right over here. You're seeing the footprint. This is the footprint. This is the complete integration between the footprint indicator, between the imbalance zones, between the absorption, between all of the indicators capable to run right on this very same chart, including MBO, including the delta 2, delta 1, and at the below, people asking me right now, yeah, this is the speed of market. When you are scalping and all three of these indicators aligned together, and you can watch on my website or on my YouTube channel how I trade it. But you see, the thing is that now you can have all of these indicators and you can take them, whatever indicators you don't need it, off the screen, but you can see the bigger picture right in front of you because all of these indicators integrated. Bookmap never done that. ATS never done that. Deepcharts never done that. Never done. I need to, for the big trades, I need to, because I put the filter for the New York, I need to go to the market delta, this one, and I can do like, okay, 5. So minimum size, I can do 5 again. So because it's an Asian session right now, I'm adjusting it right on the fly for you. So you're going to see the market delta as well. Indicator, here we go. You see this bubble, these bubbles, this bubble. This is the early Asian session. That's what it is about. And you can see this bubble as well, the big delta. Okay. So, and you see the complete footprint. You can see what's going on, if there is an unfinished business or not. You can see the POC. You can see the, even on each candle, you can see the volume profile on each single candle like that. This is the volume profile on that very candle if you wanted to. And on top of that, guys, I'm absolutely thrilled to demonstrate you this software. I love that because we also have something that I never seen anywhere. Delta that is calculated in real time during the candle while candle is still at work. It's not completed or not finished yet. You see, minus, this is plus 26. It's kind of semi-transparent over here. Not too much yet, 26, but this is the delta in this very region. For example, this is, do you see that there is a candle bar and there is a smaller bar left of it? This is even larger. This is the delta. It is the delta this one, minus 53, this is the second kind of the bar left of the main bar that is thicker. It is the delta bar. You can change the size of that, but this is accumulates or calculates in the real time. So you don't have to wait until the most of the delta is, guys, most of the delta will show you a number over here or over here when after the candle completed and the new candle starts to build. These numbers we have calculated in real time while the candle is still going up and down. You will see this in real time. So you are capable to make fine decisions while the candle is still in construction. This is absolutely unique. This is the great tool for any scalper. There's a couple of people asking quick question. Is it possible to watch the MBO DOM and the pulling stacking on the same chart? Yes. I think you have only seen it in videos with the order DOM. Yeah, exactly. Okay. You see, right now, you're seeing my pre-build templates that I share with all of you guys. It's all available to download. And this is the MBO DOM. As you can see, the number ones on the right side, that means it's not filtered DOM at all. Now, you see, this is pulling and stacking delta right over here. But if you want to see a pulling and stacking on the right side instead of the MBO DOM, you can do it this way. Let's go to the indicators. And I'm going to MBO DOM. I'm going to hide the MBO DOM visible, or I can make it what? DOM histogram. Okay, I'm going to hide the DOM histogram totals. Now, what you're seeing right now, let me center it. Boom, baga boom. That's what is the current situation. This is the pulling and stacking on the DOM. On the DOM. You see the bright, like it's a brighter, darker green color and a brighter red color closer to the price line. This is the newly added during this candle. You can do for 2 candles or 1 candle, whatever time you can set it for how long it's going to show you newly added, like this newly added, this newly added, this newly added. And you see the one that is blacking out inside, it is the removed. It's freshly removed positions. Freshly removed positions. So now you're seeing the liquidity heat map right here. And I mean, I just filter it too much. Oh, there's some liquidity sitting right here. And you see that on the DOM. You see this DOM is showing, yeah, I seeing you guys. That's the DOM produced the heat map. So now you see the connection between the heat map and the DOM and pulling and stacking. Oh, yes. You can, I mean, you can put the MBO DOM and you can put the pulling and stacking on the same chart at the right side over here. Yeah, yeah, absolutely, you can. So my point today was, the main point is, most traders, when they want to sell you courses, they show you only one particular execution and they're like, oh, I'm so good. You're fucking good, but you don't have a consistent results. Because look at this very chart. When the market is moving the same direction, okay, the same direction, continuously moving the same direction in the long term, specifically, imagine if this is the daily candles, then when you make money. But when the market is on the tangle, going in a corridor like this is the stupidest, wrongest place to enter into the market. So if you considering this as a position, or this as a position, or this as a position, or this as a position to trade, you are completely wrong. Only when the price is hitting the upper side of it, upper side of this range, in this case is like here, then you enter it. So my favorite trading system is a trading pullbacks. I love it. I totally love it. And I can show you at any time at the night or day you wake me up that I can trade the pullbacks. It's my favorite setups. But I wait sometimes and I'm not trading because I'm waiting for the perfect situation. And when the situation is perfect, guys, somebody is telling me, hey, Oleg, could you demonstrate that you can support what you're talking about? Oh yeah. Okay, guys. Let me open just a second. Let's go on the Telegram. I'm just simply scrolling. Okay, this is my data. Percent profitable, 93%. And this is the time I'm trading. What I'm? Oh, that was the Ninja Trader Championship. I participated in a couple of them, and my point was to be consistent. 93% profitable out of 74 trades. They let you trade only micro, and I was trading only gold, micro gold. 74 executions, guys. 74, but they let you enter with a position, 3 contracts. I wasn't entering always with the 3 contracts. It was too aggressive. Quite often with 1 or 2. 74 executions. Let's say the executions were like, okay, you can divide it by half, 30 plus, whatever. But it is a 93% positive, profitable out of the on a competition. You have no idea. It's a freaking Monday. Oh, by the way, this is my humble numbers. Look, I'm like about 600 below my rank is, and I made 600. And this is what good about this is it is recorded by Ninja, not by me. And there is some other people below me, Carmine. I respect this guy, but I think that his system needs to be upgraded. He never I never seen that he trade MBO. When he will plug in MBO, Carmine, his number 385, so he's like twice less than whatever, not twice, but a little bit less than what I was able to crank, but he will improve it significantly. The only reason is I am here because, this is the featured traders, all these featured traders. I'm like wondering why the Tanya at the end of the day, she was in negative zone. She was here at the moment positive 124, but she was 800 and then she swung down to 0. Tanya trades what? She trades price action. She trades ACT on the Ninja. I'm like, what a loss. Why do you trade on the Ninja with the volume indicators and you don't use them at all? She have no idea. So I have a low respect, Tanya. I'm sorry, you look cool, but you trading is, I don't know why the Ninja is featuring them. This is the featured, or they paid money or the Ninja invited them. And look, the highest was 1,800 and the other people were like 6,000. This is a losers. The Ninja must invite these people to be on their streams instead of these guys. I'm not talking about me, but these guys like Sarah or Chris, or TT Trades and Lumi Trades and Chris Boxes, Sarah, Tanya, these guys are losers, and they are quite often on the Ninja live stream channel. I'm not better. Basically, the reason why these people lose, I tell you one single reason. Because when you have your own system, you need to follow point to point. Exactly. Don't betray your own system. And this is why these guys were losers. Because they lost only by one single reason, guys. Not because I'm better than them, no. Because they betrayed themselves. They betrayed their own system. That's why. I know they are good traders, some of them, except these people. Now, but at least I try to be careful. I was using only one instrument. I wasn't trading 2 or 3 instruments like it was permitted to other. These guys were probably trading 2 or 3 instruments, so they went really like boom, boom. No, that wasn't my goal. First time I participated in the competition, but this is the official record. That's my point. So it's not just like what I screenshotted for you, because you see my mug over here and my name over here. This is practically realistically me, and it is recorded by the Ninja. So let's go up. You're gonna get sick. Guys, I'm gonna show you this result. Why? Because I want to say how great I am? No, I want to say how great you can be. So this is again one of the championship, 94%. But that was the last one. Imagine $100,000 on the cone. Imagine Ninja paid the toppest guy, the winner, $100,000. What any other platform is capable to do that? So if I go and scroll up, you're probably gonna see some of my other data, and people get bored from me that I always have a high percent win rate. This is previous competition. This is a 100% win rate, guys. I lost even In the previous screenshot, you saw that I've hit one stop loss with the 3 contracts, and now I've hit no stop losses at all. Guys, 100%. Yeah, slightly less money, 549 on a micro gold again, but 100% win rate. Do you want to trade 100% win rate? Is that possible? This is what Ninja is recorded on a previous competition before the final ones. So it was Monday as well. It was super tough. Now let me show you. Did I promise you that there is clusters on the icebergs? If I will see them, I'm gonna show it to you. Anyway, let me see some others like this ones. Oh, this is the iceberg refuels. This is the live dome, probably on ES, and you see how this iceberg is currently refilling the orders. You see the white ones? That's where the refill in happens, and this is amazing. There's no other software on the planet Earth is capable to demonstrate that. Again, this is the iceberg clusters. You see the iceberg, you see the icebergs as the clusters. You see how many of them, boom, 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 boom. There's a cluster zone right over here, and there's a cluster zone right over here. So boom, I went up. When I let the price exhausted over here, I went up, and I didn't took this trade. I'm simply demonstrating you guys how to trade the iceberg. This is the best way to trade icebergs. But there's almost zero education about the icebergs. Or over here, you see, now look at this. You see this icebergs where seller, seller, seller. This is the whole cluster zone over here. So the price went down and then came back to this. So anyway, this is the icebergs and the liquidity on the heat map and the MBO DOM live MBO DOM. Okay, let me go. Okay, this is another. I was just like, this is my trades, guys. This is I was trading live. I still have this video recording. What is this? This is boring 100% win rate. Boring 100% win rate. Yeah, there were like 7 trades. Yes, yeah, but you see each trade, I was positive. Okay, so then, okay, let me go. You're going to be bored to death. Amount of 100% or 90% or at least 80 or 96 or 70% win rate that I'm going to. If you go on this Telegram channel, you can scroll up and you can see, or you can go on a Discord, you can see it as well. So I don't want to bore you right now to death, but it's happening again and again. Look at this. Okay. This is 22 trades. This is my trades and 100% win rate. Guys, I mean, what is this? This is that? Yeah, that's the situation. And you can see my trades on the chart. I demonstrate on the video that it's not a one single freaking trade. It is the whole session, guys, the whole session. And I tell you, if you get into the groove on the session, that's possible with you. And that's the only reason I'm showing it to you. Not that I am great, but you can be great. Is that possible for you to be consistent? Yes, absolutely. Because now you know if you want to exit because of the MBO DOM is capable to show you where to exit if there is a sudden liquidity on the DOM. This is on the gold, and I hide this market maker on the DOM on the gold. I'm able to. There's no any other DOM, and when you look at the book map at the whatever any software, any MBO software, or even DOM level 2, you are not able to filter out this. You see the 100. This is the market maker. I want to hide them. I made them transparent, but I'm able to make the market maker transparent. I see the number, but they are no longer even reflected on my heat map. Where did you ever see in the software like that, where you can hide a market maker on your heat map? Give me a break, guys. Why I'm so excited? Because, oh, by the way, this is the complete strategy. This is the complete strategy. How I do a reversals or a pullbacks. This is the complete strategy pullback. And you see how these indicators on the level 1, level 2 play together and with the footprint and the delta blocks and market delta bubbles, all of that, and the footprint all on the same chart. And you see, does it make sense? It makes sense, guys. That's why we have the indicators, and we trade not a single indicator, but we trade indicators in a context. So you can go on my Telegram. Go ahead, guys, and you can scroll up and you will be like, oh, fuck, it's again 100%. You're going to see above 50% on a consistent basis. Okay, guys? So my point is that possible for you? what I'm talking to you. When you trade, instead of trading a single, yeah, pullbacks is your favorite too. Is that possible to trade consistently? Yes. Is that possible to make a huge money? You know, these people who won the competition $100,000 and below on Ninja Trader competition, they were competing with the thousands of others, and they were positive, making and cranking serious cash. So that's simply a proof. Yes, it's possible. But most people trade volume profile instead of MBO. Trade volume profile alone instead of trading the heat maps. By the way, let's go and switch to the gold. What's going to go with the gold right now? Because so this is the same chart on the gold. The gold, I'm probably going to go and load the chart template specifically for the gold. If you need these templates, guys, you're welcome. I'm going to give you like a 1, 2, 3, 4 packages, and there's a gold. This is the gold. I already shared with everyone this template as well. So this is on gold, guys. This is it. This is it. The gold is one of my instruments that I love to trade, and the reason is very simple. It's quite same or equal volatility on the all sessions, all round. Of course, there is some variations of that, but now look how well the imbalance zones are playing the role. The single imbalance zone. This is the trapped buyers sitting right there. So the price probably gonna hit this level, and it's probably gonna unlock these guys over here. We'll see. I mean, you can predict the price. Yeah, people asking me all the time. Yes, absolutely, you can. If you understand the market mechanics, that the way that I explain it today, I'm simply saying, guys, when you're seeing a one indicator, even this is absolutely unique indicator, draw the zone and use it as the cluster, and then you're gonna see a bigger picture, and then you're able to take a better entrances. Like on this chart, definitely the entrance should be here, because this is the mirror retest, not over here. So what you're seeing on this very screen, you're seeing all indicators you ever dream about, united on the same chart. You want to combine them, and whatever the indicators, you want to turn them on, you want to turn them off, and that's exactly what you are capable to do. So this is just like absolutely fantastic. Okay, now you see, it's just I turn it on heat map that is with the two colors building on both sides. You see now the heat map start building on these two candles, and you see it is a green at the bottom and it is red at the top, and you see the particular levels here, here, and here, and here, quite obvious. They matching with the MBO DOM, and this is the beauty of the MBO DOM, because the heat map is the map of liquidity, right? But these guys, it is the lifetime up to the millisecond liquidity sitting on the MBO DOM. And there's a bunch of strategy and automation is possible to do that, and high frequency trading as well. So we made our MBO engine open to everybody. If you want to build your own indicators based on the MBO, come to us. You're gonna get access to the MBO data. You can build your own indicators. You can build your own automation. You can use our indicators, whatever you wanted to. So now we are the only first company on the planet. Sorry, guys, I don't know why, but we are the only one company that makes MBO data available to everybody to use. Of course, you need your own rhythmic through the pro firms or something, whatever, but you're capable now to play with the MBO data, and build indicators that nobody built before and never even conceived the idea for indicator that you have in your own mind. Okay, so now we're coming back to this unfinished business over here. You see the sellers are small over here, but buyers large. You see 30, 22. This is a large buyers, and there's a single imbalance zone on a buying side. So these people is coming back to this area. Their objective is this cluster. This is their objective, guys. This is the objective. What's going to happen when the price reach this objective? I don't know. But usually when the price reach objective, it going one or another way furiously. Because after you've done your deal, you've done your homework, you accomplished your goal and target, this is where you can, Watch my video. It's called Springboard to something. I forget about it. That's where I explain how you can take the longest distances on the chart, on the price. So, and get a high risk to reward, because you understand when the price accomplish, like you see, look, okay, now you see this, for example, that's just a short example. And I'm going to end on this. When you see that prices came here once, came here twice, it's fulfilled its objective, because the objective was this range. And of course, I'm seeing it in hindsight, but then when price is fulfilled objective, okay, now you see the movement. This is the point. When you start operate that price have its own objective, its own goal, what it needs to accomplish. My belief that probably price is deserved to come back to this area. Yeah, probably. Because the market maker was in a total shit over here. If they were able to come up with recuperate some of their money on the buying and selling spread over here, then they don't have to. But it depends how much they were in negative zone right over here when the price moved into the candle like that. So guys, I explained it to you. I explained it to you. When the price is moving furiously, it is primitive to say price discovery. Price discovery, price, it's like prices have nothing to do. They just go on a vacation. No, that vacation cost a lot of money. This vacation cost money. So the price usually when you trade, like for example, when you even trade the pullbacks, this is the extension, and the price usually come back to this. What price gonna do after that? It's a second deal, but the price usually come back to the zone like that. Or if you're seeing, for example, this extension, candle extension, the price come back to that extension, fulfill it, and goes back again. So with every single turn, what I see on this screen, the scenario repeats again and again. Why? Because market maker is sitting in the problems. You see this extension, that is a large delta block, green delta block, and there's a bunch of the zones. You see, this is a very, now you know it because some extensions may travel like this extension on zero volume. The volume was not significant over here, guys. The volume was like absolutely nonsense. And when you look at the price action, you never understand what's inside of this. So the volume in this candle over here, look, the volume was not significant. Look at this candle. This is delta 2. But if we take a look at the volume, it was much higher over here. And this candle moves because there were a lot of buying power. One zone, another imbalance zone, another imbalance zone, another imbalance zone. By the way, there's only one was not in a row, and then another imbalance zone. This is amazing. That's why this candle that swing down fulfill its purpose, and now we're probably gonna bounce again. But the thing is that this is amazing. This is the chart that talks, the talking chart. Instead of you and me doing the talk, we need to let chart doing the. By the way, this candle is furiously buying candles, a lot of buying power. They may simply step away, but they probably gonna act again in the future, because that is like a lot of buying power right over here. So if they arrest sellers to exit and exhaust themselves, we're gonna see it over here. We're gonna see at the bottom of the candle. Yeah, we're seeing, because let's take a look. Let's take a closer look. At the bottom, there's a 3 on a sales, 2, there's a 3, there's a 1. There's not too much sales at the very bottom of these candles. So do we have the chance that we rebound? Yeah, we do have a chance, because there is not too many sellers right here. Not too many. This is yes, but these people may exit the market, not enter into the market. We'll see it in a second, especially when we're gonna see the short candle. If this candle body will, oh, this is it. This is a short candle. So short candle is one of my favorites, because this short candle demonstrate the fight what happens in the middle, and it's kind of like equilibrium. So we're building what? Triangle. And by the way, triangles builds naturally by psychology of the market, because how the market participants behave, these kind of triangles builds on its own. And I have a whole bunch of videos how do I trade it. not like some people who trade the triangles, because we're not trading triangles, we're trading psychology of the triangle. What the objectives on this side and what the objective on that side. And sometimes it can do it like this, and it can do it like this, or it can do a double trap. So anyway, this point of the small candle is the point of the tension. And usually after the point of the tension, price is, a simple way to take it to see what is the main direction. The main direction of the gold is now we're going where? We're going higher and higher and higher. So the chances that we're going to go and spring higher now are larger. That's exactly what we're doing now. So after this triangle, that's point of the tension, it is the springboard, boom. So we've done it a few times, not successfully, break of structure. Again, triangle, kind of the triangle, obvious triangle, we're springing up, and you have your system, and you have a cofactors that you can combine, like over here. You see, this is the sellers on the right side, on the left. This is the buyers on the heat map, and you can use the heat map. Easy to understand. I like this two color, red and kind of reddish, and the green better than I like the blue and red on a traditional heat map. This is no brainer to think, because it's the two colors that show you brighter side. There is a brighter liquidity sitting here, here, and here, and brighter, higher liquidity sitting, volume sitting over here and here. And you can see the confirmation during the real time, what's going on the price. You see that these people sitting over here, this is liquidity, and these people sitting here, they build this liquidity. But now when the price is going to approach them, if price is coming to this level, like most likely it will go through. But if price is striking from here to this liquidity level, it most likely bounce. And this is where you can earn 8 to 10 ticks guarantee.